Flagship Minerals Ltd, ASX FLG on the Australian Stock Exchange, is a gold company operating in Chile. And joining me right now is Managing Director Paul Locke. Hello, Paul.
Hi, Tim. How are you? Good to be here
It's
again.
great to see you again. Now, listen, you've had a rebrand, you could say it, a rebrand, a complete refit of the company. So you've gone from Pan Asia to Flagship. You've just raised money on the market, and you've got a fantastic project, Pantanillo, which is over in Chile. So
Pantanillo, yes.
please tell us, number one, how's the reorganisation of the company internally and externally? What's that look like?
Okay, well, anyone who knows Pan Asia knows that we were in lithium. We've decided to move into gold and copper. Pantanillo is our primary project, gold. The reason for that is we're looking to be involved in markets with very diverse supply and very diverse customer base, and that removes a lot of the risk of your market and a lot of the complexity. So we found in specialty metals that a big part of the initiative involves actually identifying and securing customers. And in smaller markets, that can be difficult because there are a lot of suppliers, potential suppliers. So we've always been about low cost jurisdictions, lower cost projects. If we're positioned at the bottom third or quarter of a cost curve, we'll always be able to sell a product into the market. Now, to reinforce that, moving into copper and gold means that we've got really diverse markets, simple markets, and it's providing we produce the product, we can sell it.
So now, recently, you've, in fact, only last week, you raised money, and that's going to go towards obviously developing the project in Chile.
Yep.
So
So
please tell us about the project itself. Now, you're surrounded by very large companies, and you're in an area that's prolific for gold, and so you've hit that target. Please tell us about the project in Chile.
okay. So the Pantanillo Gold Project is located in the Maricunga Gold Belt. Um, what really interests us about the project, well, three key points is, we're buying a project at a good value. It's got a million ounces, or just over a million ounces of measured and indicated under an NI 43-101, so solid resource. 50% of that's diamond. So when you look at resources, you've got inferred, indicated, and measured. Inferred's great, but you can't bank it. To go from inferred to indicated, you've got to double your drilling, possibly more depending on the complexity of your geology. And then from indicated to measured, you've got to double your drilling again, as just a really basic rule of thumb. So what we like about the project is that it is 77% measured. The resource was put together, or the history is Anaconda, Anglo, Kinross, and Orosur. So very good names in exploration, trustworthy resource. That means that we're a long way towards bankability, because you're not going to get a bank involved unless you've got a percentage of measured there. The belt itself is prolific. Within a 35-kilometre radius, we've got 60 million ounces of resource, and 12 kilometres to the northwest, we have Hochschild with 11 million ounces. Same geology, same geography. 35 kilometres to the north in the same geography and geology is Rio 2 with the Phoenix project. It's in construction. That was a tick because they were just permitted, same permitting regime. They've got funding through Wheaton Precious, a royalty stream, non-dilutive, and they're in construction. But we've also got the majors around us. So Barrick and Newmont and Kinross are there, and some other smaller players. So we're literally in the land of the giants, giant projects, giant resources, and giant names. The Barrick Newmont project is in fact 27 million ounces. So when we look at our project, where we've got a project, the value per ounce, particularly if you're buying Flagship now, is incredibly low, be around $12 an ounce. Now, in an environment where you're looking at gold, the fundamentals underlying gold, and you want to own exposure, point to me where you can buy measured resources, which on the basis of our neighbours and what their feasibility is saying, what they're constructing for, is economic for $11 an ounce.
Absolutely. It reminds me very much of the Timmins camp in Canada, because Timmins is about a 60 million ounce endowment. And and here's something that we need to talk about is that in North America and other places, they use a mineral resource estimate guideline called the NI 43101. Now, in Australia, most people looking at companies with mineral resources would be familiar with what's called a JORC code. Now, JORC code is not used by these big companies in Canada and Chile and Argentina and what's your feeling on that 43101? Do you feel that that should give an equivalent amount of confidence, if not better, than a JORC compliant resource?
Well, if you look at any NI 43101 report, um, on the TSX, that's mandatory when you report anything, and it's a scheduled guideline, similar to an Appendix A, but easier to read, or Appendix 1 under JORC. Um, the general view is that the NI 43101 is a stronger instrument. It's more prescriptive, but they're basically exactly the same. The NI 43101 requires a qualified person, a QP, JORC, a competent person. They can be the same person if they're qualified in both regimes. So essentially, there's not much difference at all. But if you're studying a project and a geology, and I used to do this as an analyst, I'd always look for an NI 43101 because I'd get a really clear picture of what's happening.
Mm.
So they're essentially the same, but
Well, you're certainly in elephant country, and what you're saying that the very large measured resource in comparison to the total resource. But
yeah.
that's not all. So will you be doing some more exploring? So fill us in what will be happening, say, over the next 6 months.
Okay, so under ASX rules, because we're ASX listed, we're required to produce JORC 2012 data. So we'll be converting the resource to a JORC 2012 resource. But more than that, we'll probably convert it without any drilling because it's measured and indicated, and it's got so much diamond drilling. So the focus over the next 3 to 4 months is to look at the drill core, metallurgy, do what we have to do to convert to JORC. It might not require drilling. And there's a possibility that we can also expand the resource without any drilling. So the resource was cut on a pit shell or cut-off grade of 0.3 grams a tonne. Where we are for resources is 0.15 at the moment. And a gold price of 1035, so clearly a lot lower than today. So just changing those parameters will result in the change of the pit shell to the positive, and we should see more resources come in, a fair bit more. So that's the focus, convert to JORC, expand the resource, hopefully with no drilling whatsoever. And then from there, we need to do some verification work on the historic metallurgy, which is comprehensive, and then we can publish that. So that might require a little bit of reassaying and so on. We're actually talking to the QP who was involved with the original NI 43101. So that's a big advantage. They're familiar with the project. And then we're ready to go. We'll then look to open it up with either met drilling to complete a feasibility or expanding the resource.
Let's talk again now, just specifically about grade. Now, a lot of people investing in gold are looking for high grams per ton, but they're not necessarily economical projects. And when you consider you might have a rich gold vein in an intrusion, but if you have a disseminated grade throughout the asset and you've got a large tonnage of it, then quantity beats grade. And as I understand, your grade is if not equal to, but above those very large peers that you have surrounding you.
Yeah, it's really interesting, Tim. I think the simple go-to is grade, and you hear grade is king quite often, the mantra. But on any one day, I could line up, and I did the other day for an investor, a project grading around 16 grams a ton against a project grading zero point 0.5 grams a ton, both in Australia, both good projects in their own right. Their AISC was exactly the same, or essentially exactly the same, around 1850. But the lower grade project, the zero point 0.5 or 0.53, is a bulk heap leach. And being an ex-project financier, that project is more interesting because it has a longer life and is a simpler project, so it's much easier to bank. So I don't believe personally grade is king. It comes down to what your operate or what your all-in sustainable cost is and your NPV. Your NPV is king, and simplicity of process is king.
Yeah, well, Australian investors only need to look at Cadia to understand Australia's largest gold mine is sub 1 gram grade.
Sub 1 gram. Yes, exactly. Actually, it was really interesting. I think it's Aurum, AURUM, produced a quarterly cost curve of Australian New Zealand producers. And it was talking about rising costs, and there was a comment against that, with increasing focus on gold, there's a strain on the workforce. What's coming out of lithium and nickel has been soaked up and costs are rising. But when you look at that cost curve and you look at the Rio 2 Phoenix project near us, it's grading, its ROM grade will be 0.48 grams a ton. Um, uh, it's actually trucking water from Copiapo to operate. Its all-in sustainable cost is around US dollars 1,237. In Aussie dollars, it's about 1850. That's actually near the bottom of the cost curve, and it cost 117 US to build, a cheap project to build. So it's quite interesting when you look at producing companies and what their costs are against some of these projects, and then you look at some of these projects on the drawing board, and they're very high cost. So at Pantanillo, our grade is 0.69. It'll probably drop a little bit as we increase the resource because we'll drop the cutoff grade, but it's still high. In our presentation and similarly in Saturn Metals presentation, there's a peer group of heap leachers. We've got the average grade there at 0.5 grams a ton. Saturn's at 0.53. But in that peer group, Pantanillo is the highest grading project.
I think for investors watching, it'd be well worth visiting Flagship Minerals website and downloading that presentation and looking at the comparative analysis. It's educational, particularly if you think chasing high-grade gold mines is the aim of the game, when in fact low-grade gold mines with bulk quantity can be way further in front. Well, Paul, thank you very much for joining us. For investors on the Australian Stock Exchange, FLG, go look them up, sir, and I thank you very much for your time today.
Yeah, thanks, Tim. I enjoyed it, and I'm looking forward to coming back on soon.
Great.
Cheers, mate. Thanks.
Bye-bye.